Question 1. What type of life insurance policy provides coverage for a specific period and does not build cash value? Correct answer. C. Term life insurance. Explanation. Term life insurance provides coverage for a specific period, such as 10, 20, or 30 years, and pays a death benefit if the insured individual passes away during the term of the policy. Unlike whole life or universal life insurance, term life insurance does not build cash value over time and is designed to provide temporary coverage for a specific need, such as income replacement during working years or mortgage protection. Question 2. Which type of life insurance policy offers flexible premium payments and an adjustable death benefit? Correct answer. B. Universal life insurance. Explanation. Universal life insurance is a type of permanent life insurance that offers flexibility in premium payments and death benefits. Policyholders can adjust the amount and frequency of premium payments and have the option to increase or decrease the death benefit over time, subject to certain policy conditions. Universal life policies also accumulate cash value based on interest rates and policy performance. Question 3. Which life insurance policy provides coverage for the entire lifetime of the insured and includes a cash value component? Correct answer. C. Whole life insurance. Explanation. Whole life insurance is a type of permanent life insurance that provides coverage for the entire lifetime of the insured individual. It includes a cash value component that grows over time based on a predetermined interest rate set by the insurance company. Whole life policies offer fixed premiums, guaranteed death benefits, and the ability to borrow against the cash value or surrender the policy for its cash value. Question 4. Which of the following statements best describes a variable life insurance policy? Correct answer. B. It provides a death benefit that varies based on investment performance. Explanation. A variable life insurance policy is a type of permanent life insurance where the policyholder can allocate premiums into separate investment accounts, such as stocks, bonds, or mutual funds. The cash value and death benefit of the policy are not guaranteed and can fluctuate based on the performance of these underlying investments. Variable life insurance policies require securities licensing due to the investment component involved. Question 5. What is the primary purpose of a final expense insurance policy? Correct answer. A. To provide coverage for funeral and burial expenses. Explanation. Final expense insurance, also known as burial insurance or funeral insurance, is designed to cover the costs associated with funeral and burial expenses when the insured individual passes away. This type of policy typically has a smaller death benefit compared to traditional life insurance and is meant to ease the financial burden on family members during a difficult time. Question 6. What does an accidental death benefit rider provide to a life insurance policyholder? Correct answer. A. Additional coverage in case of death due to an accident. Explanation. An accidental death benefit rider is an optional add-on to a life insurance policy that provides additional coverage in the event of death resulting from an accident. If the insured dies due to an accident covered by the policy, the accidental death benefit is paid out in addition to the base death benefit. This rider is designed to provide extra financial protection for unforeseen accidents. Question 7. Which of the following statements best describes a critical illness rider in a life insurance policy? Correct answer. C. It pays a lump sum benefit upon diagnosis of a specified critical illness. Explanation. A critical illness rider is an optional addition to a life insurance policy that provides a lump sum benefit to the insured if diagnosed with a covered critical illness, such as cancer, heart attack, or stroke. This benefit is designed to help cover medical expenses or other financial needs during a critical illness, providing additional financial security beyond the death benefit of the policy. Question 8. What does a disability income rider offer to a life insurance policyholder? Correct answer. C. It pays a monthly benefit if the insured becomes disabled and unable to work. Explanation. A disability income rider is a type of insurance rider that pays a monthly benefit to the insured if they become disabled and unable to work due to injury or illness. This rider provides income replacement during a period of disability, helping policyholders maintain financial stability and cover ongoing expenses while unable to work. Correct answer. C. It pays for long-term care expenses if the insured requires assistance with activities of daily living. Explanation. A long-term care insurance rider is designed to provide coverage for long-term care expenses, such as nursing home care and home assistance, if the insured becomes unable to perform activities of daily living independently. This rider offers financial protection against the high costs of long-term care services, allowing policyholders to use the death benefit of the policy to cover these expenses if needed. Question 10. What does a spousal or child term rider typically provide in a life insurance policy? Correct answer. B. It provides coverage for a spouse or child under the same policy. Explanation. A spousal or child term rider is an optional addition to a life insurance policy that extends coverage to a spouse or child of the insured under the same policy. This rider allows the insured to secure life insurance protection for family members without requiring separate policies, providing additional financial security for loved ones. Question 11. What is the primary purpose of the underwriting process in insurance? Correct answer. C. To evaluate and classify risks associated with insuring individuals or entities. Explanation. Underwriting is the process of assessing and evaluating risks associated with insuring individuals or entities. Insurance underwriters use various tools and methodologies to determine the likelihood of claims and establish appropriate premiums. This process helps insurance companies make informed decisions about accepting or rejecting risks and setting appropriate terms and conditions for insurance policies. Question 12. Which risk assessment tool is commonly used in insurance underwriting to evaluate an individual's health status? Correct answer. D. Medical underwriting questionnaires. Explanation. Medical underwriting questionnaires are commonly used in insurance underwriting to assess an individual's health status and determine their insurability. These questionnaires collect detailed information about an applicant's medical history, lifestyle, and current health conditions to evaluate the associated risks. The responses help underwriters make informed decisions about policy issuance, coverage limits, and premium rates. Question 13. Which of the following statements best describes the use of actuarial tables and mortality tables in life insurance underwriting? Correct answer. D. Mortality tables estimate probabilities of death at different ages, aiding in underwriting and pricing policies. Explanation. Mortality tables, also known as life tables, are statistical tools used in life insurance underwriting to estimate the probabilities of death at different ages. These tables provide essential data for assessing mortality risk and pricing life insurance policies based on expected life expectancy. Actuarial tables complement mortality tables by providing additional calculations for risk assessment and policy pricing. Question 14. What role does underwriting play in determining policy premiums and coverage in life insurance? Correct answer. B. Underwriting assesses risks associated with insuring individuals, influencing both premium rates and coverage limits. Explanation. Underwriting plays a critical role in life insurance by assessing risks associated with insuring individuals. The underwriting process evaluates factors such as an applicant's age, health status, lifestyle, and medical history to determine the level of risk. This risk assessment influences both the premium rates charged for the policy and the coverage limits offered to the policyholder. Question 15. How does cash value accumulation work in permanent life insurance policies? Correct answer. C. Cash value accumulates tax deferred based on premiums paid and interest credited to the policy. Explanation. In permanent life insurance policies, a portion of the premium payments contributes to the policy's cash value accumulation, This cash value grows tax-deferred over time based on the premiums paid and the interest credited to the policy by the insurance company. Policyholders can access the cash value through policy loans or withdrawals, providing a valuable financial asset within the life insurance policy. Question 16. What are surrender charges and penalties for early policy termination in life insurance? Correct answer: B. Surrender charges are deducted from the policy's cash value upon early termination, and penalties may apply if the policyholder withdraws funds within a certain period. Explanation: surrender charges are fees deducted from the cash value of a life insurance policy if the policyholder decides to terminate the policy prematurely. These charges are designed to cover administrative costs and commissions. Additionally, penalties may apply if the policyholder accesses the cash value through a policy loan or withdrawal within a specific period after policy issuance. Understanding surrender charges and penalties is crucial for policyholders considering early policy termination. Question 17. What are policy loans in life insurance, and what are their implications for policy owners? Correct answer: B. Policy loans are loans taken against the cash value of a life insurance policy, with interest charged on the borrowed amount and potential impacts on the policy's death benefit if not repaid. Explanation: policy loans allow policyholders to borrow funds against the cash value of a life insurance policy. These loans typically accrue interest and must be repaid to avoid reducing the policy's cash value and death benefit. If the loan amount plus accrued interest exceeds the policy's cash value, it may result in policy lapse or reduced benefits. Policy owners should carefully consider the implications of policy loans on their coverage and long-term financial planning. Question 18. What rights do policy owners have regarding changing beneficiaries, assigning, or transferring life insurance policies? Correct answer: B. Policy owners have the right to change beneficiaries at any time, and policies can be assigned or transferred with the insurer's approval. Explanation: policy owners have significant rights related to life insurance policies, including the ability to change beneficiaries at any time. Additionally, policies can typically be assigned or transferred to other parties with the insurer's approval. Assigning a policy involves transferring ownership rights to another individual or entity, while transferring a policy means moving coverage to a new policyholder. Understanding these rights empowers policy owners to make informed decisions regarding their life insurance coverage. Question 19. Which of the following is a common annuity payout option that provides payments for the lifetime of the annuitant only? Correct answer: D. Life only. Explanation: an annuity payout option that provides payments for the lifetime of the annuitant only is known as life only. Under this option, payments cease upon the death of the annuitant, regardless of whether the full principal has been paid out. This option is suitable for individuals seeking maximum income during their lifetime without survivor benefits. Question 20. What are the tax implications of annuity withdrawals and distributions? Correct answer: C. Annuity withdrawals and distributions are generally subject to income tax on the earnings portion. Explanation: annuity withdrawals and distributions are typically subject to income tax, particularly on the earnings portion of the payments. The earnings portion is considered taxable income in the year it is received, while the principal portion, contributions, is not subject to tax. It's essential for annuity holders to understand the tax implications of withdrawals and distributions to effectively plan for retirement income. Question 21. What is an annuity surrender period, and how are surrender charges applied? Correct answer: C. Annuity surrender period is the duration after purchase during which surrendering the annuity may result in a penalty or surrender charge. Explanation: the annuity surrender period is the specific duration after purchasing an annuity during which surrendering the policy may result in a surrender charge or penalty. Surrender charges are designed to discourage early withdrawals and compensate for insurer expenses. The surrender period and associated charges vary depending on the annuity contract terms. Understanding surrender periods and charges is crucial for annuity holders considering early termination of their contracts. Question 22. What are annuity death benefits, and which beneficiary option allows the beneficiary to receive annuity payments for their lifetime? Correct answer: B. Joint and survivor option. Explanation: annuity death benefits refer to the payments made to the beneficiary upon the death of the annuitant. The joint and survivor option is a beneficiary option that allows the beneficiary to receive annuity payments for their lifetime, even after the death of the original annuitant. This option provides continued financial support to the beneficiary, ensuring income security beyond the annuitant's lifetime. Question 23. Which of the following accurately describes insurance licensing and continuing education requirements for agents in the state of Georgia? Correct answer: B. Agents must pass a licensing exam and complete continuing education hours to renew their license. Explanation: in Georgia, insurance agents are required to obtain a license by passing a licensing exam specific to the type of insurance they wish to sell. Additionally, agents must complete continuing education hours regularly to renew their license. These requirements ensure that agents remain knowledgeable about industry updates, laws, and regulations, enhancing consumer protection and professionalism within the insurance industry. Question 24. What is the role of state insurance departments in regulating insurance practices within Georgia? Correct answer: C. State insurance departments enforce state-specific insurance laws and regulations. Explanation: state insurance departments play a crucial role in regulating insurance practices within Georgia. They enforce state-specific insurance laws and regulations, ensuring compliance with consumer protection standards, licensing requirements, and market conduct. State insurance departments are responsible for overseeing insurers operating within the state, maintaining market stability, and protecting policyholders' interests. Question 25. Which entity is primarily responsible for regulating insurance rates and forms in the state of Georgia? Correct answer: B. State Insurance Department of Georgia. Explanation: in Georgia, the State Insurance Department is primarily responsible for regulating insurance rates and forms. This includes reviewing and approving insurance policy rates and forms to ensure they comply with state laws and protect consumer interests. The department oversees insurance practices within the state and plays a crucial role in maintaining a fair and stable insurance market. Question 26. Which measure is commonly used for insurance fraud prevention and detection in Georgia? Correct answer: C. Collaboration with law enforcement agencies. Explanation: insurance fraud prevention and detection in Georgia often involve collaboration between insurance companies and law enforcement agencies. This partnership allows for the investigation and prosecution of fraudulent insurance activities, protecting both insurers and policyholders. Law enforcement agencies play a critical role in identifying and deterring fraudulent schemes within the insurance industry. Question 27. What is considered a conflict of interest in insurance sales and recommendations? Correct answer: C. Failing to disclose relationships that may influence recommendations. Explanation: a conflict of interest in insurance sales occurs when an insurance agent fails to disclose relationships that may influence their recommendations to clients. This could include receiving commissions from insurance carriers or having financial ties to specific products or providers. It's important for insurance professionals to maintain transparency and act in the best interest of their clients to avoid conflicts of interest and ensure ethical conduct. Question 28. What ethical considerations are important in underwriting and claims handling in Georgia? Correct answer: B. Applying consistent underwriting standards to all applicants. Explanation: in Georgia, ethical considerations in underwriting and claims handling require insurance professionals to apply consistent underwriting standards to all applicants. This means evaluating applicants based on relevant factors such as health history, without discrimination or bias. Fair and consistent underwriting practices ensure that insurance coverage is offered fairly and transparently to all individuals. Question 29. What are the professional codes of conduct for insurance agents and brokers in Georgia? Correct answer: C. Acting in the best interest of clients. Explanation: in Georgia, insurance agents and brokers are expected to adhere to professional codes of conduct that require them to act in the best interest of their clients. This includes providing accurate information, recommending suitable products, and disclosing any conflicts of interest. Upholding professional ethics builds trust between agents and clients, fostering a positive relationship within the insurance industry. Question 30. What are some ethical issues to consider in insurance marketing and advertising in Georgia? Correct answer: C. Providing clear and accurate information to consumers. Explanation: ethical issues in insurance marketing and advertising in Georgia revolve around providing clear and accurate information to consumers. Agents and insurers must avoid deceptive tactics, false promises, or targeting vulnerable populations unfairly. Adhering to ethical guidelines ensures that consumers make informed decisions about insurance products and services, promoting integrity and transparency in the industry. Question 31. Which of the following best describes the characteristics of an HMO, Health Maintenance Organization, plan in Georgia? Correct answer: B. Provides coverage through a network of healthcare providers. Explanation: in Georgia, an HMO, Health Maintenance Organization, plan provides coverage through a network of healthcare providers. Members typically choose a primary care physician, PCP, within the network and require referrals to see specialists. HMOs often emphasize preventive care and may have lower out-of-pocket costs compared to other plans, but they require members to use network providers for non-emergency services. Question 32. What type of health insurance plan is Medicare in Georgia? Correct answer: B. Government-sponsored health insurance for individuals aged 65 and older. Explanation: Medicare is a government-sponsored health insurance program in Georgia that primarily serves individuals aged 65 and older, as well as certain younger individuals with disabilities. It consists of different parts, e.g., Part A, Part B, Part D, that cover hospital insurance, medical insurance, and prescription drugs. Medicare is administered by the federal government and provides essential healthcare coverage to eligible individuals. Question 33. What distinguishes a preferred provider organization, PPO, plan from other health insurance plans in Georgia? Correct answer: C. Offers flexibility to see any healthcare provider with varying costs. Explanation: in Georgia, a preferred provider organization, PPO, plan offers flexibility to see any healthcare provider, whether they are in-network or out-of-network. However, costs are typically lower when members use in-network providers. PPO plans do not require referrals to see specialists and generally offer more freedom of choice compared to HMOs. Members may have higher out-of-pocket costs for services received from out-of-network providers. Question 34. Which of the following describes a common health insurance policy provision related to deductibles? Correct answer: C. A fixed dollar amount that the insured must pay before the insurance company begins to cover expenses. Explanation: in health insurance policies in Georgia, a deductible is a specified amount of money that the insured must pay out of pocket before the insurance company starts paying for covered medical services. It is usually an annual amount and can vary based on the policy. Once the deductible is met, the insurance company will cover a percentage or all of the remaining eligible expenses, subject to other policy terms. Question 35. What does the term coinsurance refer to in health insurance policies? Correct answer: A. The portion of covered medical expenses paid by the insured after the deductible is met. Explanation: coinsurance is the percentage of covered medical expenses that the insured is required to pay after the deductible has been met. For example, if the coinsurance is 20%, the insured pays 20% of covered expenses, and the insurance company pays the remaining 80%. Coinsurance helps share the cost of healthcare between the insured and the insurance company. Question 36. What are coverage limits in a health insurance policy? A. The maximum amount the insured has to pay out of pocket in a policy year. B. The total dollar amount the insurance company will pay for covered services. C. The percentage of covered expenses that the insured must pay after meeting the deductible. D. Specific conditions or circumstances under which the insurance company will not provide benefits. Correct answer. B. The total dollar amount the insurance company will pay for covered services. Explanation. Coverage limits refer to the maximum dollar amount that the insurance company will pay for covered medical services over a certain period, e.g., per year, per lifetime. These limits may apply to specific services, types of treatments, or overall coverage. Exceeding coverage limits may result in the insured being responsible for paying additional expenses, so it's important to understand these limits when choosing a health insurance plan. Question 37. Which of the following best describes the underwriting process for health insurance? Correct answer. B. Evaluating an applicant's health status and medical history. Explanation. In health insurance underwriting, insurers assess an applicant's health status and medical history to determine the level of risk they present. This evaluation helps insurers set appropriate premium rates and coverage levels based on the likelihood of claims being made. Underwriters consider factors such as pre-existing conditions, lifestyle choices, age, and other health-related information during this process. Question 38. What factors typically affect the insurability of an applicant for health insurance? Correct answer. C. Health status, age, and lifestyle choices. Explanation. The insurability of an applicant for health insurance is primarily influenced by factors related to their health, age, and lifestyle. Insurers assess these factors to determine the risk associated with providing coverage to an individual. Health status, including pre-existing conditions, age, and lifestyle choices such as smoking or exercise habits, significantly impact insurability and premium rates. Question 39. What does risk selection and classification refer to in health insurance underwriting? Correct answer. B. Assigning risk levels to applicants and determining appropriate premiums. Explanation. Risk selection and classification involves assessing the level of risk associated with insuring an individual and assigning them to specific risk categories. Insurers use this information to set appropriate premiums that reflect the expected cost of providing coverage to different risk groups. This process helps insurers manage their overall risk exposure and ensure fairness in pricing based on the applicant's health and other relevant factors. Question 40. Which statement accurately describes the relationship between state and federal regulations governing health insurance in Georgia? Correct answer. B. Federal regulations take precedence over state regulations when there is a conflict. Explanation. In Georgia, health insurance regulations are governed by both state and federal laws. When federal and state regulations conflict, federal law generally takes precedence due to the supremacy clause of the U.S. Constitution. However, states also have the authority to regulate certain aspects of health insurance within their borders, provided they do not conflict with federal laws like the Affordable Care Act, ACA. Question 41. Which of the following provisions is included in the Affordable Care Act, ACA? Correct answer. C. Requiring dependent coverage up to age 26 on parents' health plans. Explanation. The Affordable Care Act, ACA, includes several provisions aimed at improving access to healthcare and insurance coverage. One key provision is allowing young adults to remain on their parents' health insurance plans until the age of 26, providing extended coverage for dependents. This provision has significantly expanded insurance coverage among young adults in the United States. Question 42. What do HIPAA regulations primarily focus on in relation to health insurance? Correct answer. B. Regulating the privacy and security of individuals' health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations primarily focus on protecting the privacy and security of individuals' health information. This includes establishing rules for the use and disclosure of protected health information, FI, by covered entities, such as health insurers and healthcare providers. HIPAA aims to ensure that individuals' medical information remains confidential and secure. Question 43. Which statement accurately describes the purpose of health insurance exchanges, marketplaces, in Georgia? Correct answer. B. Health insurance exchanges allow individuals and small businesses to compare and purchase health insurance plans. Explanation. Health insurance exchanges, also known as marketplaces, facilitate the purchase of health insurance plans for individuals and small businesses. These exchanges offer a platform where consumers can compare various health insurance options based on coverage, benefits, and cost, and select plans that best meet their needs. In Georgia, the health insurance marketplace plays a crucial role in expanding access to insurance coverage and promoting healthcare affordability. Question 44. What is a special enrollment period in Georgia's health insurance marketplace? Correct answer. C. An extended enrollment period for certain qualifying life events, such as marriage or birth of a child. Explanation. In Georgia's health insurance marketplace, a special enrollment period, SEP, allows individuals to enroll in or change health insurance plans outside of the regular open enrollment period. This special period is triggered by specific qualifying life events, such as marriage, birth or adoption of a child, loss of other coverage, or a change in household size. During the SEP, eligible individuals have the opportunity to enroll in a health insurance plan or make changes to their existing coverage. Question 45. What role do subsidies and premium tax credits play in Georgia's health insurance marketplace? Correct answer. B. Subsidies and tax credits help eligible individuals and families afford health insurance premiums. Explanation. Subsidies and premium tax credits are financial assistance programs offered through Georgia's health insurance marketplace to help eligible individuals and families afford health insurance coverage. These subsidies are based on income levels and are designed to reduce the cost of monthly insurance premiums for qualified enrollees. Premium tax credits are applied directly to the premium costs, making health insurance more affordable and accessible to those who qualify. Question 46. Which of the following statements best describes a managed care organization, MCO, in the context of health insurance in Georgia? Correct answer. C. MCOs are healthcare delivery systems that coordinate and manage medical services for enrolled members. Explanation. In Georgia, a managed care organization, MCO, refers to a healthcare delivery system that contracts with healthcare providers to coordinate and manage medical services for individuals enrolled in their health plans. MCOs aim to improve the quality of care, control costs, and enhance patient outcomes by emphasizing preventive care, wellness programs, and care coordination among participating providers. Question 47. What is a key characteristic of network structures and provider contracting within managed care organizations, MCOs, operating in Georgia? Correct answer. B. MCOs negotiate discounted rates with a broad network of healthcare providers. Explanation. In Georgia, MCOs establish network structures by contracting with a diverse range of healthcare providers, including hospitals, physicians, specialists, and ancillary service providers. These contracts allow MCOs to negotiate discounted reimbursement rates in exchange for increased patient volume, ensuring that members have access to a comprehensive network of healthcare services at reduced costs. Question 48. What role does utilization review play in managed care techniques implemented by organizations operating in Georgia's health insurance market? Correct answer. B. Utilization review involves assessing the appropriateness and necessity of healthcare services. Explanation. Utilization review is a critical managed care technique utilized by organizations in Georgia to evaluate the medical necessity and appropriateness of healthcare services provided to members. This process helps ensure that healthcare resources are used efficiently and effectively, promoting quality care while controlling costs. Utilization review may involve pre-authorization of certain services, concurrent reviews during treatment, and retrospective assessments to optimize healthcare outcomes for members. Question 49. In Georgia, what is the primary purpose of claims processing and adjudication in the context of health insurance? Correct answer. C. To accurately assess and pay eligible healthcare expenses covered by the insurance plan. Explanation. In Georgia, claims processing and adjudication involve the systematic review and assessment of submitted healthcare claims to determine the coverage eligibility under the insurance plan. The primary goal is to accurately evaluate and pay for eligible healthcare services, ensuring that policyholders receive timely reimbursements for covered expenses based on the terms and conditions outlined in their insurance policy. Question 50. What information is typically included in an explanation of benefits, EOB, or claims statement provided to policyholders in Georgia? Correct answer. C. Summary of claim details, including healthcare services, provider charges, and insurance coverage. Explanation. An explanation of benefits, EOB, or claims statement in Georgia typically includes a comprehensive summary of the claim, including details such as the healthcare services received, charges billed by the healthcare provider, the amount covered by insurance, any deductible or copayment due from the policyholder, and the total reimbursement or payment made by the insurance company. This document helps policyholders understand the status of their claims and how insurance coverage applies to specific healthcare services. Question 51. What measures are implemented in Georgia to prevent and detect health insurance fraud related to claims processing? Correct answer. C. Utilizing data analytics and monitoring systems to identify unusual claim patterns. Explanation. In Georgia, health insurance fraud prevention and detection efforts involve the use of advanced data analytics and monitoring systems by insurance companies and regulatory authorities. These systems analyze claim data to identify unusual patterns, discrepancies, or suspicious activities that may indicate fraudulent behavior. By proactively detecting fraud through data analysis, insurance companies can protect policyholders and maintain the integrity of the insurance system. Question 52. What ethical considerations are important in health insurance sales and service in Georgia? Correct answer. C. Recommending policies that align with the client's needs and financial situation. Explanation. In Georgia, ethical practices in health insurance sales and service emphasize recommending policies that genuinely meet the client's healthcare needs and financial circumstances. Agents should avoid misrepresentation, coercion, or discriminatory practices and focus on providing accurate information, transparent communication, and suitable coverage options aligned with the client's best interests. Question 53. What consumer rights and protections are guaranteed under Georgia's health insurance regulations? Correct answer. B. Right to request detailed information about policy benefits and exclusions. Explanation. Georgia's health insurance regulations uphold consumer rights by granting individuals the right to request comprehensive information about policy benefits, coverage limitations, exclusions, and terms before making enrollment decisions. This transparency empowers consumers to make informed choices and ensures they understand the terms and conditions of their health insurance coverage. Question 54. What constitutes fair marketing and sales practices in the context of health insurance in Georgia? Correct answer. C. Clearly disclosing policy terms, benefits, and limitations to potential clients. Explanation. Fair marketing and sales practices in Georgia's health insurance sector emphasize clear and transparent communication with potential clients. This includes disclosing policy terms, benefits, limitations, and exclusions upfront, without misleading information or undue pressure to purchase specific plans. Agents should prioritize consumer education and ensure that clients have a complete understanding of the insurance products being offered. Question 55. Which supplemental health insurance product typically covers routine dental checkups and procedures? Correct answer: C. Dental insurance. Explanation: dental insurance is a common supplemental health insurance product that covers routine dental care, including checkups, cleanings, fillings, and other dental procedures. It helps individuals manage dental expenses beyond what may be covered under their primary health insurance plan. Question 56. What are optional policy riders and endorsements used for in health insurance? Correct answer: B. They expand or modify the coverage of a base policy. Explanation: optional policy riders and endorsements are used to expand or modify the coverage of a base health insurance policy according to the policyholder's needs. They offer flexibility by allowing individuals to tailor their coverage with additional benefits or protections beyond the standard policy terms. Question 57. Which type of insurance provides coverage for expenses related to serious illnesses like cancer or heart disease? Correct answer: C. Critical illness insurance. Explanation: critical illness insurance is designed to provide financial support in the event of a serious illness diagnosis, such as cancer, heart attack, or stroke. It pays out a lump sum benefit that can be used to cover medical expenses, treatment costs, and other financial obligations during recovery, offering peace of mind during challenging health situations. Question 58. What are the tax implications of health insurance premiums paid by individuals in Georgia? Correct answer: C. Health insurance premiums are tax-deductible only for self-employed individuals. Explanation: in Georgia, health insurance premiums paid by self-employed individuals are generally tax-deductible as a business expense. This deduction is subject to specific IRS rules and limitations. However, health insurance premiums for individuals who are not self-employed are typically not tax-deductible as an itemized deduction on federal tax returns. Question 59. Which federal agency oversees compliance with IRS regulations related to health insurance? Correct answer: C. Internal Revenue Service, IRS. Explanation: the Internal Revenue Service, IRS, is responsible for enforcing compliance with tax regulations related to health insurance. This includes rules regarding the tax treatment of health insurance premiums, benefits, and other aspects of health insurance coverage. Agents and insurers in Georgia must adhere to IRS guidelines to ensure compliance. Question 60. What are the reporting requirements for insurers and policyholders regarding health insurance benefits in Georgia? Correct answer: B. Insurers must report premium payments received from policyholders, and policyholders must report benefits received on their tax returns. Explanation: in Georgia, insurers are required to report premium payments they receive from policyholders to the IRS. Policyholders, on the other hand, must report any benefits received from their health insurance coverage on their tax returns. This reporting helps ensure compliance with tax laws and regulations governing health insurance. Question 61. What is one of the key benefits associated with telemedicine and remote healthcare services in Georgia? Correct answer: B. Reduced healthcare costs for patients. Explanation: in Georgia, one of the primary benefits of telemedicine and remote healthcare services is the potential for reducing healthcare costs for patients. By allowing individuals to consult with healthcare providers remotely, unnecessary visits to hospitals or clinics can be avoided, leading to cost savings. This trend aligns with efforts to improve access to care, especially in rural or underserved areas of the state. Question 62. Which concept is associated with value-based care models in Georgia? Correct answer: D. Paying for the quality and outcomes of care. Explanation: value-based care models in Georgia emphasize paying healthcare providers based on the quality and outcomes of care delivered, rather than the volume of services provided, fee for service. This approach aims to improve patient outcomes, enhance coordination among providers, and reduce unnecessary healthcare costs. It reflects a shift towards more efficient and effective healthcare delivery. Question 63. How do technological innovations contribute to healthcare delivery in Georgia? Correct answer: C. By improving access to healthcare services. Explanation: technological innovations, such as electronic health records, EHRs, telemedicine platforms, and mobile health applications, play a vital role in improving access to healthcare services in Georgia. These innovations enable remote consultations, streamline administrative processes, and facilitate better coordination of care among providers. They contribute to more efficient and patient-centered healthcare delivery across the state. Question 64. What type of life insurance policy provides coverage for a specified period of time and pays a death benefit if the insured passes away during the term? Correct answer: D. Term life insurance policy. Explanation: in Georgia, term life insurance policies offer coverage for a specific duration, such as 10, 20, or 30 years. If the insured individual dies within the term of the policy, a death benefit is paid to the beneficiary. Term life insurance is typically more affordable compared to permanent life insurance policies and is suitable for individuals seeking temporary coverage for financial obligations like mortgage payments or children's education. Question 65. Which type of life insurance policy offers flexible premium payments and an adjustable death benefit, along with a cash value component that earns interest based on current market rates? Correct answer: D. Universal life insurance policy. Explanation: universal life insurance policies in Georgia provide policyholders with flexibility in premium payments and the ability to adjust the death benefit over time. These policies also accumulate cash value that earns interest based on prevailing market rates. Policyholders can use the cash value to cover premiums or withdraw funds during their lifetime, subject to certain conditions. Question 66. What is a distinguishing feature of whole life insurance policies in Georgia? Correct answer: A. They have a fixed premium that never changes. Explanation: whole life insurance policies in Georgia have a unique characteristic of a fixed premium that remains consistent throughout the life of the policy. This stability makes it easier for policyholders to budget for insurance costs over the long term. Whole life policies also accumulate cash value over time, which policyholders can access through loans or withdrawals. These policies provide permanent coverage as long as premiums are paid. Question 67. What key feature distinguishes variable life insurance policies from other types of life insurance? Correct answer: B. Investment component with subaccounts. Explanation: in Georgia, variable life insurance policies offer policyholders the opportunity to allocate a portion of their premiums into separate investment accounts known as subaccounts. These subaccounts function similarly to mutual funds and allow policyholders to invest in various asset classes like stocks, bonds, or money market instruments. The cash value of a variable life policy fluctuates based on the performance of these investments, providing potential for higher returns but also exposing the policy to investment risks. Question 68. What is the primary purpose of a final expense insurance policy? Correct answer: B. To cover funeral and burial expenses. Explanation: final expense insurance policies, also known as burial insurance or funeral insurance, are designed to cover the costs associated with a policyholder's funeral and burial upon their death. In Georgia, these policies typically have lower face values compared to traditional life insurance policies, aiming to ease the financial burden on loved ones during an emotional and difficult time. Final expense policies are often marketed to seniors and individuals seeking coverage for end-of-life expenses. Question 69. What does an accidental death benefit rider provide to the beneficiary of a life insurance policy? Correct answer: B. Additional death benefit if death is accidental. Explanation: An accidental death benefit rider, available in Georgia, supplements the base death benefit of a life insurance policy by providing an additional payout if the insured's death is the direct result of a covered accident. This rider is designed to offer extra financial protection to beneficiaries in cases of accidental death, such as car accidents, falls, or other unforeseen events. It's important to note that accidental death benefit riders have specific terms and conditions outlined in the insurance policy. Question 70. What does a critical illness rider typically provide in a life insurance policy? Correct answer: C. Lump sum benefit upon diagnosis of specified illnesses. Explanation: in Georgia, a critical illness rider is an optional addition to a life insurance policy that offers a lump sum payment upon the insured's diagnosis of certain serious illnesses, such as cancer, heart attack, stroke, or organ transplant. This rider provides financial support to cover medical costs and other expenses associated with critical illnesses, supplementing the insured's primary health insurance coverage. The benefit is typically paid out regardless of whether the insured survives the illness. Question 71. What is the primary purpose of a disability income rider in a life insurance policy? Correct answer: B. Pays a monthly benefit if the insured becomes disabled. Explanation: in Georgia, a disability income rider is designed to provide an additional source of income if the insured becomes disabled and unable to work. This rider offers monthly payments to replace lost income due to disability, helping the insured maintain financial stability and meet ongoing expenses. The disability income rider can complement disability insurance policies by providing an alternative form of income protection within a life insurance policy. Question 72. What coverage does a long-term care insurance rider provide in a life insurance policy? Correct answer: D. Covers costs of long-term care services like nursing home care. Explanation: a long-term care insurance rider, available in Georgia, is an add-on feature to a life insurance policy that covers expenses associated with long-term care services, such as nursing home care, assisted living facilities, or in-home care. This rider helps policyholders pay for the high costs of long-term care without depleting their assets. It provides financial security and flexibility in choosing appropriate care options as needed due to chronic illness or disability. Question 73. What is the purpose of a spousal or child term rider in a life insurance policy? Correct answer: B. Offers additional coverage for the insured spouse or child for a specified term. Explanation: in Georgia, a spousal or child term rider is an optional provision that allows the policyholder to add temporary life insurance coverage for their spouse or child to their existing policy. This rider provides an extra layer of financial protection by extending coverage for a specific period, typically matching the term of the primary insured's policy. It is a cost-effective way to secure life insurance for family members without the need for separate policies. Question 74. What is a common risk assessment tool used in underwriting for health insurance policies in Georgia? Correct answer: A. Actuarial tables. Explanation: in Georgia, underwriters use actuarial tables as a key risk assessment tool in determining health insurance premiums and eligibility. Actuarial tables provide statistical data on mortality rates, disease prevalence, and other health-related factors, allowing insurers to calculate appropriate premium rates based on the assessed level of risk. This data-driven approach helps ensure that insurance pricing is fair and accurately reflects the underlying health risks of the insured population. Question 75. What is the primary objective of the underwriting process for different types of insurance, including property, liability, and health insurance? Correct answer: C. Assess and evaluate risk. Explanation: underwriting plays a critical role in insurance by assessing and evaluating risk to determine the appropriate coverage and premium rates for policyholders. In Georgia, underwriters analyze various factors such as the applicant's health status, lifestyle, occupation, and other pertinent information to quantify the level of risk associated with insuring an individual or entity. The primary objective of underwriting is to make informed decisions that balance risk and profitability while ensuring policyholders receive adequate insurance protection. Question 76. In life insurance underwriting, what is the primary purpose of using actuarial tables and mortality tables? Correct answer: D. To predict life expectancy and mortality rates. Explanation: Actuarial tables and mortality tables are essential tools used in life insurance underwriting, especially in Georgia, to predict life expectancy and mortality rates. Actuaries analyze historical data and statistical probabilities to estimate how long policyholders are likely to live, enabling insurers to set appropriate premium rates and policy terms based on the assessed level of risk. This data-driven approach ensures that insurance companies can accurately price their policies while providing adequate financial protection to policyholders. Question 77. What role does underwriting play in determining policy premiums and coverage for life insurance policies? Correct answer: B. Underwriting evaluates risk and sets appropriate premium rates. Explanation: Underwriting is a critical process in life insurance policy issuance in Georgia, involving the evaluation of risk factors associated with potential policyholders. Underwriters assess various factors such as age, health status, lifestyle, occupation, and medical history to determine the level of risk posed by insuring an individual. Based on this risk assessment, underwriters set appropriate premium rates and coverage limits, ensuring that policy terms align with the insurer's profitability goals while providing fair and adequate protection to policyholders. Question 78. How does cash value accumulation work in permanent life insurance policies? Correct answer: A. Cash value accumulates at a fixed interest rate determined by the insurer. Explanation: In Georgia, cash value accumulation is a unique feature of permanent life insurance policies, such as whole life or universal life. The cash value represents the portion of the policy's value that grows over time based on premiums paid and interest credited by the insurer. Typically, insurers guarantee a minimum fixed interest rate for cash value accumulation, ensuring steady growth over the policy's lifetime. Policyholders can access the cash value through withdrawals or policy loans, providing a valuable source of liquidity and financial flexibility. Question 79. What are surrender charges and penalties associated with in life insurance policies? Correct answer: C. Charges imposed for early termination or surrender of the policy. Explanation: In Georgia, surrender charges are fees levied by insurance companies when policyholders terminate or surrender their life insurance policies prematurely, typically within the first few years of the policy. These charges are designed to cover the insurer's administrative costs and protect against lapses that may occur soon after policy issuance. Policyholders should be aware of surrender charges and consider them before deciding to surrender or terminate their policies, as they can significantly impact the amount of cash value received. Question 80. What implications do policy loans have for life insurance policyholders in Georgia? Correct answer: A. Policy loans accrue interest and reduce the policy's death benefit. Explanation: Policy loans allow policyholders in Georgia to borrow against the cash value of their permanent life insurance policies. However, these loans accrue interest over time and must be repaid to avoid reducing the policy's death benefit. Failure to repay policy loans can diminish the overall value of the policy and impact beneficiaries' payouts upon the insured's death. Policyholders should carefully consider the implications of taking out policy loans and ensure timely repayment to maintain the policy's financial integrity. Question 81. What rights do life insurance policy owners have regarding beneficiaries, assignment, or policy transfer in Georgia? Correct answer: C. Policy owners can change beneficiaries, assign, or transfer the policy at their discretion. Explanation: In Georgia, life insurance policy owners retain several important rights related to their policies. They have the authority to change beneficiaries, assign ownership, or transfer the policy to another individual or entity. These rights provide flexibility and control over the management of life insurance policies based on the policy owner's evolving needs and circumstances. It's essential for policy owners to understand and exercise these rights responsibly to ensure their life insurance coverage aligns with their long-term financial goals and intentions. Question 82. Which of the following represents an annuity payout option that continues payments for the lifetime of the annuitant, with no survivor benefits? Correct answer: C. Life only. Explanation: in Georgia, the life-only annuity payout option provides payments to the annuitant for their lifetime only, with no survivor benefits. This option ceases upon the annuitant's death, regardless of when payments commenced. It offers the highest payout amount compared to other options but carries the risk of payments stopping if the annuitant passes away relatively soon after starting the annuity. Question 83. What are the tax implications of annuity withdrawals and distributions in Georgia? Correct answer: D. Withdrawals and distributions are generally taxable as ordinary income, with some exceptions for non-taxable amounts. Explanation: in Georgia, annuity withdrawals and distributions are typically taxed as ordinary income, with the portion attributable to earnings subject to taxation. However, there are exceptions for the return of principal, which is generally not subject to taxation. It's essential for annuity owners in Georgia to understand the tax implications of withdrawals and distributions to effectively plan their retirement income strategies. Question 84. What do annuity surrender periods and surrender charges refer to in Georgia? Correct answer: C. The period after annuity purchase during which surrendering the annuity incurs charges. Explanation: in Georgia, annuity surrender periods refer to the duration following the purchase of an annuity during which surrendering the annuity may result in surrender charges imposed by the insurance company. Surrender charges are designed to discourage early termination of annuities and typically decrease over time until they are no longer applicable. Annuity owners should carefully consider surrender periods and associated charges before deciding to surrender their annuities to avoid unnecessary financial penalties. Question 85. Which of the following represents an annuity death benefit option that guarantees payments for a certain period, even if the annuitant passes away? Correct answer: C. Period certain annuity. Explanation: in Georgia, a period certain annuity provides a death benefit guaranteeing payments for a specified period, such as 10 or 20 years, regardless of whether the annuitant survives the period. If the annuitant dies within the specified period, payments continue to the designated beneficiary until the end of the period certain. This option can provide added security for beneficiaries and is a common feature in annuity contracts. Question 86. What are the insurance licensing and continuing education requirements for insurance agents in Georgia? Correct answer: C. Agents need to complete a pre-licensing course and pass a state exam, with ongoing continuing education obligations. Explanation: in Georgia, insurance agents must complete a state-approved pre-licensing course and pass a state licensing exam to obtain an insurance license. Additionally, agents are required to fulfill continuing education requirements periodically to maintain their license. These continuing education obligations ensure that agents stay updated with changes in insurance laws, regulations, and products, enabling them to provide accurate and informed services to clients. Question 87. What is the role of state insurance departments in Georgia? Correct answer: C. State insurance departments regulate insurance companies operating within the state. Explanation: in Georgia, the state insurance department plays a crucial role in regulating insurance companies and agents operating within the state. This includes licensing and overseeing insurance companies, ensuring compliance with state insurance laws, investigating consumer complaints, and promoting consumer protection. State insurance departments work closely with national regulatory bodies but primarily focus on regulating insurance activities within their respective states to safeguard policyholders and ensure a fair insurance marketplace. Question 88. What is the primary role of state insurance departments in regulating insurance rates and forms in Georgia? Correct answer. C. Monitoring and reviewing insurance rates and forms to ensure they are fair and compliant with state laws. Explanation. In Georgia, state insurance departments oversee the regulation of insurance rates and forms by monitoring and reviewing them to ensure compliance with state laws. This includes assessing whether insurance rates are fair and not discriminatory, and ensuring that insurance policies, forms, meet legal requirements and provide adequate coverage to consumers. State oversight helps protect consumers from unfair pricing practices and ensures transparency in insurance transactions. Question 89. Which of the following is a key measure for preventing and detecting insurance fraud in Georgia? A. Requiring insurers to provide free insurance policies to consumers. B. Implementing strict penalties for insurance agents who sell policies below market rates. C. Establishing special investigation units within insurance companies to investigate suspicious claims. D. Requiring consumers to purchase insurance directly from the state insurance department. Question 90. Which ethical issue relates to conflicts of interest in insurance sales and recommendations in Georgia? Correct answer. C. Agents recommending insurance products solely based on personal financial gain. Explanation. In Georgia, conflicts of interest in insurance sales and recommendations occur when insurance agents prioritize personal financial gain over the best interests of their clients. This ethical issue can lead to misrepresentation, inappropriate product recommendations, and inadequate coverage for policyholders. Insurance agents are expected to act in the client's best interests by providing unbiased advice and suitable insurance solutions that meet their needs, rather than focusing on maximizing their own financial incentives. Question 91. What ethical considerations are important in underwriting and claims handling practices in Georgia? Correct answer. B. Providing accurate and truthful information in policy applications and claims. Explanation. In Georgia, ethical considerations in underwriting and claims handling emphasize the importance of providing accurate and truthful information in policy applications and claims. Underwriters must assess risks fairly and objectively based on factual information provided by applicants. Claims should be processed promptly and fairly, ensuring that policyholders receive benefits they are entitled to under their insurance contracts. Failing to uphold these ethical standards can lead to legal and regulatory consequences. Question 92. Which professional codes of conduct apply to insurance agents and brokers in Georgia? Correct answer. C. Industry-wide standards set by professional organizations like NAIFA or IIABA. Explanation. Insurance agents and brokers in Georgia adhere to industry-wide professional codes of conduct established by organizations such as the National Association of Insurance and Financial Advisors, NAIFA, or the Independent Insurance Agents and Brokers of America, IIABA. These codes promote integrity, transparency, and professionalism in insurance sales and client interactions. Agents are expected to prioritize clients' interests, maintain confidentiality, and act ethically in all business dealings. Question 93. What are common ethical issues in insurance marketing and advertising that agents and insurers should be aware of in Georgia? Correct answer. D. Using deceptive advertising tactics to mislead consumers. Explanation. In Georgia, ethical issues in insurance marketing and advertising involve avoiding deceptive practices that mislead or confuse consumers. Agents and insurers must provide accurate and clear information about insurance products, including terms, conditions, and limitations. Deceptive advertising can undermine consumer trust and lead to regulatory sanctions. Agents should adhere to state laws and regulations governing advertising and ensure that marketing materials are truthful, transparent, and compliant with ethical standards. Question 94. What are the key features of health insurance plans in Georgia? Correct answer. B. They cover preventive care and wellness services. Explanation. In Georgia, health insurance plans typically include coverage for preventive care and wellness services, in addition to major medical expenses. This coverage often encompasses routine checkups, vaccinations, screenings, and other services aimed at preventing or detecting health issues early. Preventive care coverage is mandated under the Affordable Care Act, ACA, for certain services deemed essential for maintaining health and preventing diseases. Question 95. What distinguishes HMOs, PPOs, EPOs, and POS plans in Georgia? Correct answer: A. Provider network restrictions and referrals. Explanation: in Georgia, health insurance plans like HMOs, health maintenance organizations, PPOs, preferred provider organizations, EPOs, exclusive provider organizations, and POS, point of service, plans differ primarily in their provider network structures and referral requirements. HMOs typically require members to choose a primary care physician, PCP, and obtain referrals for specialist care within the network. PPOs offer greater flexibility with out-of-network coverage but usually at higher costs. EPOs are similar to HMOs but do not require referrals, and POS plans combine elements of HMOs and PPOs with in-network and out-of-network coverage options. Question 96. Which of the following statements best describes health insurance policy provisions and benefits in Georgia? Correct answer: B. Policy provisions vary by insurer and plan, outlining coverage details and benefits. Explanation: in Georgia, health insurance policy provisions and benefits are not standardized but vary based on the insurer and specific plan. These provisions outline the coverage details, benefits, limitations, and conditions of the insurance plan. It's important for policyholders to review these provisions carefully to understand what services are covered, any associated deductibles, copayments, or coinsurance, and other important details related to their health coverage. Question 97. What are common policy clauses found in health insurance plans in Georgia? Correct answer: B. Deductibles, copayments, and coinsurance. Explanation: health insurance plans in Georgia commonly include policy clauses such as deductibles, the amount paid out of pocket before insurance coverage kicks in, copayments, fixed amount paid for covered services, and coinsurance, percentage of costs shared between insurer and policyholder. These clauses determine the cost-sharing responsibilities of the insured and impact the overall affordability and accessibility of healthcare services. Question 98. What do coverage limits and exclusions refer to in health insurance policies in Georgia? Correct answer: C. Services or treatments not covered by the insurance plan. Explanation: coverage limits and exclusions in Georgia health insurance policies refer to services or treatments that are not covered by the plan. These exclusions may include specific medical procedures, elective treatments, experimental therapies, or services deemed medically unnecessary. It's crucial for policyholders to review their plan's coverage limits and exclusions to understand what services may require out-of-pocket expenses or alternative coverage options. Question 99. What is the primary purpose of the underwriting process for health insurance in Georgia? Correct answer: C. To evaluate the applicant's health status and determine risk. Explanation: in Georgia, the underwriting process for health insurance involves evaluating the applicant's health status, medical history, and other factors to assess risk. This assessment helps insurance companies determine the premium rates, coverage options, and conditions of the policy based on the applicant's health profile. Underwriting is crucial for insurers to manage risk effectively and ensure that policy pricing reflects the expected healthcare costs associated with the insured individual. Question 100. Which of the following factors can affect an individual's insurability for health insurance in Georgia? A. Gender and marital status. B. Age and occupation. C. Political affiliation and social media activity. D. Vehicle ownership and driving record. Correct answer: B. Age and occupation. Explanation: In Georgia, several factors can impact an individual's insurability for health insurance, including age and occupation. Insurance companies consider age-related health risks and the nature of an applicant's occupation to assess insurability. Certain occupations or hazardous activities may pose higher health risks, affecting the insurance underwriting process and determining coverage options and premiums. Question 101. What does risk selection and classification involve in health insurance underwriting in Georgia? Correct answer: B. Assessing the likelihood of claims based on medical history. Explanation: Risk selection and classification in Georgia's health insurance underwriting process involve assessing the likelihood of claims based on an applicant's medical history, health conditions, and lifestyle factors. Insurance companies use this information to categorize applicants into risk groups, which influences coverage decisions and premium rates. This practice ensures that insurers can accurately predict and manage potential healthcare costs associated with different risk profiles. Question 102. Which of the following is a key aspect of state and federal regulations governing health insurance in Georgia? Correct answer: B. Regulating the formation and licensing of insurance companies. Explanation: State and federal regulations in Georgia govern the formation and licensing of insurance companies to ensure their financial stability, compliance with legal requirements, and consumer protection. These regulations establish standards for insurers' operations, solvency, and conduct in the market, contributing to a stable and competitive insurance industry. Question 103. Which provisions of the Affordable Care Act, ACA, have a significant impact on health insurance regulations in Georgia? Correct answer: B. Limitations on pre-existing condition exclusions. Explanation: The Affordable Care Act, ACA, imposes limitations on pre-existing condition exclusions, ensuring that health insurers in Georgia cannot deny coverage or charge higher premiums based on pre-existing health conditions. This provision aims to enhance access to health insurance coverage and protect individuals with prior health issues. Question 104. Which aspects of HIPAA regulations and privacy rules are relevant to health insurance practices in Georgia? Correct answer: B. Establishing standards for electronic health transactions. Explanation: HIPAA regulations in Georgia establish standards for electronic health transactions, ensuring the secure exchange of health information between healthcare providers, insurers, and other entities. These regulations safeguard patient privacy and confidentiality, promoting the use of secure technology for healthcare operations and insurance transactions. Question 105. What is a key aspect of understanding health insurance exchanges in Georgia? Correct answer: B. They provide a platform for individuals and small businesses to compare and purchase health insurance plans. Explanation: Health insurance exchanges in Georgia, also known as marketplaces, serve as platforms where individuals and small businesses can compare and purchase health insurance plans from private insurers. These exchanges offer a range of coverage options and facilitate enrollment in qualified health plans, promoting transparency and choice in the insurance market. Question 106. What are enrollment periods and special enrollment options related to health insurance marketplaces in Georgia? Correct answer: B. Special enrollment options allow individuals to enroll outside of the standard enrollment periods under certain qualifying events. Explanation: Enrollment periods in Georgia's health insurance marketplaces refer to specific times when individuals can enroll in or change their health insurance coverage. Special enrollment options allow individuals to enroll outside of the standard enrollment periods due to qualifying life events such as marriage, birth of a child, or loss of other coverage. Question 107. What are subsidies and premium tax credits in the context of health insurance marketplaces in Georgia? Correct answer: C. Subsidies help lower the cost of health insurance premiums for eligible individuals, and tax credits are applied directly to reduce premium costs. Explanation: Subsidies and premium tax credits in Georgia's health insurance marketplaces are financial assistance programs designed to make health insurance more affordable for eligible individuals and families. Subsidies directly reduce the cost of health insurance premiums based on income levels, while premium tax credits are applied to reduce the amount individuals pay for coverage, helping to increase access to health insurance. Question 108. What is a key characteristic of managed care organizations, MCOs, in Georgia? Correct answer: B. MCOs integrate financing and delivery of healthcare services. Explanation: Managed care organizations, MCOs, in Georgia are characterized by their integration of financing and delivery of healthcare services. MCOs typically establish provider networks and employ various managed care techniques to control costs while maintaining quality of care. These organizations often use capitated payments and emphasize preventive care and care coordination. Question 109. What are network structures and provider contracting in the context of managed care organizations, MCOs, in Georgia? Correct answer: C. Network structures define the types and number of providers included in an MCO's network. Explanation: In Georgia, managed care organizations, MCOs, establish network structures that define the types and number of providers included in their networks. Provider contracting involves negotiating contracts with selected providers to establish rates, terms, and conditions for services provided within the network. These structures and contracts are crucial for ensuring access to care while managing costs within the managed care framework. Question 110. What role does utilization review play in managed care techniques within Georgia's MCOs? Correct answer: C. Utilization review aims to evaluate the appropriateness and necessity of medical services. Explanation: Utilization review is an essential managed care technique employed by MCOs in Georgia to assess the appropriateness and necessity of medical services provided to patients. Through utilization review, MCOs can ensure that services are delivered efficiently and in accordance with established guidelines, helping to control costs and maintain quality of care. Question 111. What is a crucial step in health insurance claims processing and adjudication in Georgia? Correct answer: C. Conducting a thorough review to determine claim validity. Explanation: In Georgia, health insurance claims processing involves conducting a thorough review of submitted claims to determine their validity and eligibility for reimbursement. Adjudication refers to the process of evaluating claims against the insurance policy's coverage provisions and applicable guidelines. This step is essential for ensuring that legitimate claims are processed accurately and efficiently. Question 112. What is the purpose of explanation of benefits, EOBs, and claims statements in health insurance in Georgia? Correct answer: C. To communicate claim status, payments, and any patient responsibility. Explanation: Explanation of benefits, EOBs, and claims statements play a vital role in health insurance in Georgia by communicating essential information to policyholders. These documents outline claim status, payments made by the insurance company, and any remaining patient responsibility, such as deductibles or coinsurance. EOBs help policyholders understand how their claims were processed and what costs they may be responsible for. Question 113. What measures are taken in Georgia to prevent and detect fraud related to health insurance claims? Correct answer: B. Conducting regular audits and investigations into suspicious activities. Explanation: In Georgia, fraud prevention and detection in health insurance claims involve proactive measures such as conducting regular audits and investigations into suspicious activities. Insurance companies and regulatory bodies work together to identify and address fraudulent practices, which can include billing for services not rendered or misrepresenting patient information. These efforts help protect the integrity of the insurance system and prevent unnecessary costs. Question 114. What are important ethical considerations for health insurance sales and service in Georgia? Correct answer. B. Providing accurate and clear information to clients. Explanation. Ethical considerations in health insurance sales and service in Georgia emphasize the importance of providing accurate, clear, and honest information to clients. Agents and brokers must act in the best interest of their clients, ensuring they fully understand policy terms, coverage options, and any limitations. Misrepresentation or withholding information can lead to consumer dissatisfaction and potential legal consequences. Question 115. What are some key consumer rights and protections in Georgia related to? Correct answer. B. Right to review and dispute claim denials. Explanation. In Georgia, consumers have the right to review and dispute claim denials by health insurance providers. This protection ensures that policyholders can challenge decisions that they believe are incorrect or unfair. It's essential for consumers to understand their rights and avenues for recourse when dealing with claim denials to ensure fair treatment under their insurance policies. Question 116. What principles guide fair marketing and sales practices in the context of health insurance in Georgia? Correct answer. C. Disclosing policy terms and exclusions clearly to clients. Explanation. Fair marketing and sales practices in Georgia require agents and insurers to disclose policy terms, benefits, exclusions, and limitations clearly and transparently to clients. This ensures that consumers make informed decisions about their health insurance coverage without encountering surprises or misunderstandings later. Agents must avoid using deceptive or misleading tactics to promote sales. Question 117. What are optional policy riders and endorsements commonly associated with health insurance in Georgia? Correct answer. B. Adding dental and vision benefits to the health insurance plan. Explanation. Optional policy riders and endorsements allow policyholders to customize their health insurance coverage to better suit their needs. In Georgia, common optional riders include adding dental and vision benefits to a health insurance plan. This provides comprehensive coverage beyond basic medical expenses, addressing specific health needs such as routine dental care and vision exams. Question 118. What is the purpose of critical illness and long-term care insurance in Georgia? Correct answer. B. Offering financial protection against major illnesses and extended care needs. Explanation. Critical illness and long-term care insurance in Georgia are designed to provide financial support when individuals are diagnosed with serious illnesses or require long-term care. These insurance products help cover expenses associated with critical illnesses not typically covered under standard health insurance policies, such as cancer treatment or long-term care services needed due to aging or disability. Question 119. What are supplemental health insurance products commonly offered alongside primary health insurance plans in Georgia? Correct answer. D. Dental and vision insurance. Explanation. Supplemental health insurance products like dental and vision insurance are frequently offered alongside primary health insurance plans in Georgia. These supplemental plans provide coverage for dental care, such as cleanings, fillings, and crowns, and vision care, including eye exams, glasses, and contact lenses, enhancing overall health coverage and addressing specific healthcare needs. Question 120. Ms. Anderson, a resident of Georgia, is concerned about protecting herself financially in case she is diagnosed with a critical illness such as cancer or suffers from a prolonged illness that requires extended care. Which insurance product would best address her concerns? Correct answer. C. Critical illness insurance policy. Explanation. In Georgia, critical illness insurance provides coverage for specific serious illnesses listed in the policy, such as cancer, heart attack, stroke, and organ transplant. If Ms. Anderson is diagnosed with one of these critical illnesses, the policy will pay out a lump sum benefit, providing financial assistance to cover medical expenses, loss of income, or other financial obligations. This type of insurance is particularly valuable because it offers a financial safety net during a time of significant health crisis.